Will they be hopping in the chat here?
Yes, the chat. Welcome, everyone. I'm live here with Bradford Ferguson. Yes, Bradford. Brad, the comments are going to be on the side, so if you want to pull any up or star any, feel free to.
Okay.
How's it going, everyone? Happy Friday. It seems like it's been, years in the making since we've had a couple green days in a row. But here we are, Tesla sitting at $756, up 7%-ish on the day. Before we get into it, before I introduce, not that he needs any introduction, friend of the show, this is Bradford's disclaimer. Bradford, do you want to talk about your disclaimer that you have to give?
Sure. I am an investment advisor. However, this is not investment advice for you. Your risk tolerance is different than mine and different than that of my clients. So whatever is appropriate for you, what I'm describing may not be appropriate. And yeah, I'm just trying to do my best. I believe things to be what I'm saying is be factual, but a lot of it's opinion. We're gonna talk about Tesla options, and options can be very risky, but they can also be a way that you can control your risk.
Yeah, totally. And man, what a day for, I can't imagine, like, I'm not really too heavy into options at the moment, but if you're holding out of the monies, especially weeklies, the last couple of days, I can't even imagine the kind of return that we've seen on those. But man, $756, $755 sitting on Tesla at the moment. Do you think it's so early to call them, but let's just start here.
So I'll make a little confession.
Okay.
So last Friday I bought some weeklies for this week, and they're like the 630s. I bought the 630s for today, and
Nice.
I think I paid like around $50 or something like that, $55.
Oh yeah.
But I dumped them on Tuesday.
Of course. See, that's my problem is, like, whenever I hold anything to expiration, it goes to zero. But when I sell it like the day before to recoup like 10 cents on it or something, it just flies. So I'm with you there. By the way, if you want to throw in the chat where you're tuning in from, city, state, country, feel free to. Brad, let's
That was more of a gamble. What I was doing, I mainly try and be a little more long term with any kind of stock options I do to augment a Tesla position.
No, for sure. That's kind of, I was, especially in the January, February this year, I just told myself, like, yeah, you got to stop. You're just, you're doing 2 weeks out, you're doing weeklies, you're wasting capital. Not only that, but like, you can probably attest this to, like, the amount of mental capital it takes out of your day to even like have to continually check up on weekly options or like even monthlies. Let's be honest. Like, it's just, it eats up into your mental capital, or at least for myself, it does. So, I've just been DCAing and kind of leaving it there with commons, but I'm starting to get tempted. I had an awesome chat with Tesla economist Lee last week, or a couple of days ago, actually.
Yeah.
Last week, it feels like a long week, and we were talking about leaps. So I want to get your thoughts about the options market, implied volatility. How do you see it? Tesla price action. But the leading question I'll ask you right now is, so do you think we've kind of seen the bottoming here? This is just there's no way you can win this question, by the way. But do you feel like the kind of worst, and if we retrace back to what 630 I think was the low in the last week here, do you think that was kind of the bottom, or do you foresee in the next quarter here some more pain?
Yeah, so we're up 20% from that intraday bottom on Tuesday. And there's really been no real fundamental news. There's the whole taking off of the margin loan for Elon's Tesla that he's using to buy Twitter, but like, that's not fundamental to Tesla long term. And I never felt like that margin loan was gonna force Elon to sell Tesla price. Like, it is like highly unlikely that it would ever come into play. I understand like why some short-term players would be, thinking that would be a factor, but really there's been no news, and so I feel like what we've seen over the last 3 days is just an exhaustion of fear, and that's what can happen in market bottoms. Like, there's literally no one ringing a bell at the bottom. There's no real fundamental news. We already had the the factory news for Austin and Berlin early in the week. So when they talked about Berlin going from one shift to two, like that was already known by the market. So it's if you are long Tesla, it's like it feels like you can breathe a sigh of relief. I know there's a lot of margin that's came out of Tesla. There's been some people that are forced to sell. Supposedly Leo Kogwan, who's the second or third largest holder of Tesla shares, he said he wasn't forced to sell.
He's off margin though, I think. I believe I read some tweets a couple months back or something that he said that.
Oh, okay.
Yeah, I think he used to be on margin like years back, and he learned his lesson, and he's like, ever since then, I don't take up margin anymore.
Okay.
I think, but he does do options though.
Yeah. I just know other people that have been affected by that, and margin or leverage that options bring, it definitely adds to the emotions. It kind of feels like a bottom, but I feel like with the results that are coming for Tesla, I feel like the media is not going to be fair about it. They're going to say that the growth story is over. Last time Tesla delivered 245,000 cars, which is where some people are at now for this coming second quarter, was the third quarter of last year. And when we look at the third quarter last year, I'm looking at Estimize for these numbers. It's a website. The EPS of that third quarter was $1.86 a share. And I think if Tesla does deliver, I got to find you guys again there. If they do deliver 245,000 cars, I think they're going to do better than $1.86 a share. We don't have Tesla having to do the accounting on Elon's stock-based compensation. That's largely done. And we should finally see price increases flow through. A lot of the price increases that happened in Q1 were from an increase in mix. So there was more Model Y and there was a higher mix of performance in long range versus standard range in the US. So I think we'll see some benefits of that. So they should do better than Q3 last year. But what the media will do is compare it to Q1 and say the growth story is over. And even though Tesla was forced to shut down the factory in China, they won't give us that context. They won't give the public that context. So people won't be able to make a good comparison. So I worry a bit that over the short term, that the production and delivery report and the earnings, the profits report, that the media is going to harp on that. And there will be people out there who will listen to Gordon Johnson and him saying the growth story is over when we know that
there were shutdowns. There were shutdowns. The big question for me, and that's probably going to happen. I think we probably have to brace for that for sure. I think the big question for me is going to be how do margins, how does the capitalization of the new factories affect margins? I think Martin said, in during January's call or for quarter four, I think he said that he expects some margin compression with these new factories, and then we had a bunch of shutdowns and then delaying of the factories. So I'm wondering if Q2 we're going to see a lot of those expenses pass through into and affecting margin. I guess we'll see, but my kind of opinion is, by the way, it's 757 sitting on Tesla here. My opinion here is that just throw anything negative. Just get it all over with this quarter. If there's going to be bad margins, go for it. If there's going to be even more shutdowns, have them, just throw everything out this quarter so we can have like a clean palette moving in for Q3 and Q4. The Berlin news, though, I think kind of has passed through just kind of seemingly unrecognized because what is it, 2 shifts now out of Berlin. Do you know how many cars they're producing per week or per month right now?
No, it's really hard to tell. I tried to do a little what they call parking lot truthing, and um, there's not a whole lot of Model Ys that Giga Berlin is keeping in their parking lot. So when they get them out the door, they're getting them on the car carriers and getting them off the lot. There's like 100 or so Model Ys that are in the back of Giga Berlin, but those may be some of the Model Ys that they made when they weren't allowed to sell those models, when they weren't fully approved, but they were allowed to test the production.
Yeah.
So it's hard to tell, but the very fact that they're moving from 1 shift to 2 means to me that they're gaining confidence, and they feel like if for whatever reason they're not quite there yet, that they will be soon. I'm guessing they're ready. The other thing that may have happened in Berlin this quarter is with the Shanghai shutdown. I'm not sure how many batteries they were able to get from CATL because they're using the CATL batteries in Berlin before they get the 4680 spun up in Berlin.
Right.
But it's also hard to tell how many cars are being sold in Austin. And I looked at the parking lot, and like there's these white cars that are there like every day, and they're in the same like pattern. So I don't know if they're going to batch deliver those to employees, or if they're for customers like a week later, that kind of thing. Tesla's mainly selling those cars to start to employees and to people in the Austin area. And, if we remember, I got to think Tesla has at least 60,000 employees in the US. Before they even scaled to China, I think they had over 50,000. So there's a lot of employees that they can sell to that probably want a Model Y and don't want to wait for a long range Model Y.
Yeah, the Austin narrative is interesting because seemingly they got everything done except, I think, are they still waiting for that last approval certificate rubber stamp to start really going into next year? Is that really what they're waiting for, or is that happening and I just missed it?
So there may have been 2 models that they applied for with the EPA, and they've gotten approval on that one that has the lower range Model Y. And there's been some fun polls with Tesla people on Twitter. Is like, okay, would you pay $1,000 less, but you get 40 miles less in range for the Austin Model Y, but get that faster, or do you want to wait 6 months to get the Fremont Model Y and have more range? So a bit of mystery about all that too.
Right. And that's going to inevitably flow down to the margin equation too. If we're talking 4680s all of a sudden, right? At decent volume, while 4680s we know are going to have a way higher margin than the 2170s from cattle, let's say. Even in Shanghai, as amazing as those margins are, we're expecting 4680s to be a step above that.
Yeah.
Right.
You also have front and rear castings. I believe Tesla has learned things from Shanghai. So, they did Shanghai. They started the Model 3 in early 2020. So anything they learned from that, they're going to apply to Berlin and Austin. One of the mistakes the Bears made in 2019 was they thought that Tesla would just repeat the mistakes they made with Model 3 in Fremont when they had production hell, that they would just repeat that in Shanghai. And it's just ridiculous that they would do that.
And we know, like for example, like gigacastings, right? Like you brought that up just in passing casually, but it's so important to Tesla, not only to scale, but also it's going to affect their margins, right? And
you lower the weight of the car.
And
one of the most expensive parts is the batteries, and then you don't need as many batteries.
True. It's like a self-fulfilling kind
Yeah.
of truism there, right? So yeah, it's interesting nonetheless. Like amidst everything that's going on, you look at recession fears, which companies are going to survive. Elon was tweeting last night, we kind of need a recession because it's just kind of like an enema in the economy with companies that have negative gross margins still surviving somehow, and whatnot. And you kind of look at Tesla's balance sheet, 17.5-ish billion dollars worth of cash equivalents, almost zero debt. So Tesla is very much equipped to survive a recession should there be one. I should caveat
Mhm.
that, at least, and however long it really lasts. And Tesla's demand, it's kind of funny because in a recession, usually you can expect demand to go down. And I was having this conversation with Lee a couple of days ago. I was saying, but if there is a recession and we start seeing gas prices continue to skyrocket and stay at elevated levels, there'll almost be a shifting towards more EVs, because as consumer purchasing power goes down and gas prices stay high, people are going to want to switch to EVs even more. So the EV revolution will actually somehow benefit from a recession, not just Tesla, but the EV industry as
Mhm.
a whole, because people and families are trying to figure out, okay, well, if we can somehow get rid of this gas expense that we have every month, $200, $300 worth of gas that
Yeah.
we're paying for our car, well, we can save that with an EV. Let's look at EVs in the used car market. And then the more consumers that start looking into the EVs will start to realize that EVs are the way to go. So it almost accelerates it if there is a recession. Not that I want there to be one, because
Mhm.
that's terrible. But you have to look at technological change during these times and kind of consider the macro effect that we'll have in the next 5 years from it, right?
Yeah, you look at the EVs and the monthly payment for just the car itself is much higher. But depending on how much you drive, CNBC just said that gas prices hit a new all-time high today or yesterday nationwide in the
Wow.
U.S. And if you drive enough, you might be spending $200 a month on gas,
Mm.
and that may only be the equivalent of, in an EV, it may only cost you $40 a month. So when you then compare the monthly cost and you put everything together, not just the vehicle, not just the fuel, the EV looks a lot more compelling.
Oh, for sure. Yeah. And I see this comment here from Farzad. Go check out his channel, awesome channel. He said, I'm guessing my dad bought a Model 3 because his diesel was costing him $700 a month. You know,
Wow.
during a recession, like, these expenses are the first ones that people are going to try to substitute out, right? Because, if, and then back in 08, 09, there was no real EV landscape, right? Like, I think the Leaf was, other than Tesla, like the Leaf was the first one to actually be like an option for consumers. And that was like in 2011, 2012. So last recession, there really was no way to get out of spending money. And I don't think gas prices were that high anyways back then. But
Yeah.
yeah, I mean, if a recession does happen, Tesla's balance sheet is well equipped to handle it. Their demand is probably not going to wane, if not grow. But I do, Bradford, I was kind of having this kind of therapy session with Lee about Tesla and their prices. 'Cause every day I log into Twitter and it's like Tesla's increased the price, and I get it. They have to. Input costs are going up, but I
Hmm.
just don't want. I don't want to live in a world where all of a sudden, let's say, fast forward a year out, the Model 3 is like 70K, 65K Canadian or something. Like,
Yeah.
it sucks because all these new entrants that we know we're trying to justify their costs for lower
Mm.
income families. Like, how do you look at that in the next 5 years as a strategy? Of course, demand is not gonna wane for Tesla, but how do you kind of fit into that lower rung of a price range for Tesla moving forward?
Yeah. According to the Q1 call, I think the main argument Elon was making is that Tesla is scaling the Model 3 and Y. They don't have to make their business more complicated by introducing new models, and there's a ton of demand for the 3 and Y, and they're very profitable. Um, if you look at Berlin and Austin, essentially what Tesla is doing is they're going to be bringing on 1 million more per year of Model Y, so
Hmm.
500,000 each, and they might be adding some capacity for the Y in Shanghai. So you bring on that much supply and eventually they should come into balance with demand. And when they do, let's say wait times go to like a few weeks,
Right.
or a couple weeks, and then maybe 1 week, then Tesla's going to really learn what the true demand is. Because I think most people aren't going to sit there and wait for the car. Like maybe Farzad's dad, he saw the diesel bill and he's like, I got to change my car now. But I think that's the case for most people. But eventually Tesla may overwhelm the demand a bit, and they'll need to lower price to bring in more people. Right now they're dominating the luxury market, but there are a lot of people who reach up to the Tesla. This is a little old data, but in 2019 at the shareholders meeting, Elon shared that 62% of buyers of the Model 3 traded in a non-luxury vehicle, so a vehicle that was priced under 40,000. I think that's a big deal. I think things will come into balance, but the risk is, okay, so then they need to lower prices for just to bring it to more masses. But then if autonomy works, then they may not need to lower prices. Then you have then you're buying someone to drive your car, and you're buying a car that you can potentially use as a taxi, that may make money for you, while you're chilling out, having some oranges on a Friday.
There we go. By the way, I'm having instant coffee today because I couldn't find my filter for the coffee. It's that type of Friday. Nothing can really affect me negatively today, so I'm having instant coffee, which is a big no for me. But
I don't have my juju with me today, so
apparently we don't need it. I mean, last time you were on was October. And it was infamously or famously right before that huge pump up couple of weeks that we saw for Tesla breaking 1,000 for the first time, hitting 1,200. So like every time you're on the channel, it's always a good omen, because it probably means that we're probably going to see, hopefully, some sort of strength here moving forward. But you're right. I mean, the margins with margins so high, you have the ability to start pricing down. Does that, and autonomy affects that, of course. We know what Elon sounds very confident about FSD going into wide release this year and autonomy happening. Where are you with FSD? I don't think we've chatted about FSD too much. Of course, it just like totally changes the economics of the business. Like it completely flips it upside down in a really awesome way. But let's talk about FSD. Where do you kind of see it? Are you looking at people's FSD videos for progress updates? What's your general thoughts around it?
Yeah, so I saw some of the videos for, I think it was 11.2 or something like that. That version. It looks great. The display looks great. The cars, when it's showing the environment around you, it just looks a lot more solid. Things aren't jumping around as much. The cars that it's seeing aren't jumping around. I thought that was really impressive. And it's doing a lot of things right. I watched one from Holmar's catalog and Dirty Tesla. Those look great. I am a beta tester. I'm on the old version still, so it hasn't gone to the non-cool kids yet. But it does well in my area. I live in an area with a bunch of roundabouts, which is unusual. So normally it'll come to a stop as it's approaching the roundabout. So I just need to kind of feather the acceleration, so I encourage it to go. But sometimes it'll come to a stop because of traffic, and it'll try to go when it shouldn't. So yeah, I feel these issues are correctable, and I think Tesla has some work to do to make it a little more comfortable, a little less jarring, but it's amazing what it can do. Like there's no other car in the market that you can drop it into any city and it has a chance to take you from point A to B without
Yeah.
you turning it off or tapping the brake or whatever.
Yeah. Like we
So
saw with that Ukraine video. Remember last year when someone imported a FSD beta car into Ukraine a year and a half ago, maybe. Do you remember that? And
no,
then
I didn't see that. I
oh,
don't know.
really?
Yeah,
Yeah.
tell me about
It kind of went viral. There was like someone, I think it was, I forget what city it was, but someone just was in Ukraine and they like imported an FSD beta car and then they just turned it on and it was like trying to make turns in like this European country. Like it was interesting and it went kind of semi-viral. And I think Elon even actually liked a tweet of someone like breaking it down. I forget if someone remembers throw in the chat. But yeah, no, it was cool. Like it was like to that exact point, right? Like take that car, drop it anywhere in the world. It should be in theory able to work, right? So, and better. So
yeah. I'm curious how it does in European roundabouts that have left lane markings, that kind of thing.
those like really narrow European streets, like that's going to be
Yeah.
tough, you know?
Well, it seems that Kim Paquette tests out the car in, I believe it's Rhode Island, very narrow, old cities, and it does pretty well. It also does well in Berkeley, where it's very hilly and narrow, and it seems to negotiate like where you got to pull to the side because someone else is coming. It
Yeah,
seems to do
exactly.
that well. So
Yeah.
like it's they're addressing a lot of the questions I would have about Tesla being able to bring this to the masses is in these dense cities where there aren't really parking spots. You can't pull, there's no shoulder, you can't pull aside. Like how can the car negotiate that? And it's doing it pretty well.
Yeah,
You know, there's still things where it messes up, but it's doing it pretty well. So I'm more of an optimist, and I think Tesla's will figure it out. And the thing to keep in mind as a long-term investor is the approach that Tesla is using is the lowest cost approach. So they have the 8 cameras in the car. They're not using LiDAR or radar. So, the cost of LiDAR will come down, but that they're probably saving $5,000 there by not having like a bunch on all 4 corners and in the middle. And they also don't need a supercomputer in the back of the car. You can look at the trunk of a Mobileye, and it's like this crazy thing that looks like a gaming PC. It's liquid cooling, LED lighting. It's like probably at least a $10,000 computer, and maybe they get the cost down, but still Tesla has I would say a $10,000 advantage because no LiDAR, no supercomputer needed.
Yeah.
So I think if they figure it out and somehow someone else does, Tesla's gonna just have yet another cost advantage. So that's the ridiculous thing about Tesla's.
Yeah.
It seems to me like there's advantages wherever you look. Like no dealer network. We could go on for a day. Just talk about
it's the baggage. It's the lack of baggage that Tesla. And you know what? Like here's the thing with FST that I continue to harp on whenever I have debates with friends is that look, if for argument's sake, let's say XYZ company solves FST other than Tesla. Well, now how do they deploy that out to the masses, right? Like now they have to go equip cars, manufacture cars, partner with third parties, retrofit them in, get them on the streets. That's kind of the strategy there. Now, so that's one side, and that's just for argument's sake that if they can solve it, let's say. Now let's say if Tesla solves FSD, if and when Tesla solves FSD, all they have to do is push an update to the fleet. And obviously AI Day, we know Elon's talked about the awakening of the fleet and whatnot. And he gets harped on, okay, well, like, look, you said there's going to be 1.5 million robotaxis or whatever on the road. But the point here is that if and when it's solved, it's a software update away. And if that's true and Tesla solves for that, then all of a sudden you can imagine there's no retrofitting required. I mean, maybe for some certain cars you might have to, but let's say for the newer cars that have been shipped out and deployed, no retrofitting required on them, just a software update, deploy them to the fleet, and then be on your merry day. It's the advantage of not having to scale now after FSD is solved or partner with a third party, because I mean, God knows that could take so long, right? Tesla just has to put out a software update. So that's the
Yeah.
inherent advantage. And you talk about Kathy Wood and ARK Invest, they often say like robotaxis is kind of a winner take all environment. And if that's true and it's kind of first to market, then it kind of seems like Tesla would eat the market share. Now, there are certain areas in the States, as we know.
ARK is basically saying that there may be like geographic monopolies. So I think that's why, some of these some of these companies went to San Francisco and they're operating in New York. Like they're trying to master
Phoenix.
a city, and then they might try and launch in a big way in that city. And what ARK is saying is that they may have a certain gravity to the business if they can be the first to market, have like a really useful Robotaxi. Yeah.
Exactly.
One point I make about the beta is I also tried it down in Austin. So I rented a Turo that had the beta on it.
Okay.
And one thing that really surprised me is like when you're in a totally new area, you don't know how exactly you drive the roads every day. So it's like, it's really easy to nitpick or notice mistakes that it makes where you live and on the roads you drive. But when I was in totally foreign roads, it was very confident and it did quite well. Still made some mistakes, but like it was very confident where I didn't know what was around the corner or whatever, but the Tesla kind of did in a way.
Yeah. It's kind of like having that's what kind of Tesla is building here. It's like a shared brain with all of the different intricacies of different cities and countries and road signs, and eventually reading different languages on road signs and whatnot, like having all of that built in, right? Of course, there's going to be like, I think any San Francisco FSD beta video is like always like top tier in terms of just like how well it looks, because I mean, it's SF, like everything goes there. And I think it has the most beta users, right, per capita for any city probably. So yeah, I mean, FSD is awesome. It changes the economics entirely for Tesla. But for that reason, and because the step change on FSD, if we were to start talking about robotaxis, it would just be like in a whole nother league of its own for economics. That's why I think Wall Street really discounts a lot of it for now, because they just kind of want to have the kind of wait and see approach towards it. So
where are we at right now on the share price?
Let me pull it up. So 758 on Tesla. I wanted to talk to you about Tesla options as well.
Wait, so 758 a share. I don't think Tesla is. I'll be a little controversial right now. Is like I don't think they're fully priced as an automaker alone.
Yeah, that's where I'm
at 758 a share. So like, I don't think FSD is priced in. And Tesla bot definitely not priced in.
Yeah, Tesla bot, we don't have to get too much into it, but that's a whole nother conversation we can have.
Tesla's profits in Q1 exceeded the profits of GM or Ford, and Tesla makes 4 times less as many cars as GM and a third less as Ford. And Q4, I think Tesla may be able to double their profits versus Q1 of this year. And people will figure it out over time. There are these, when Amazon was coming around, there was the argument about Amazon versus all the other retailers. And they would stack the market value of Amazon, then they would stack all the market of all the other retailers. And I'm not sure where it stands today, but at a certain point, Amazon was 2 times the value of all the other retailers. So,
for sure.
It's about growth, and growth and profits is what matters long term.
Yeah. Reasoning by analogy has really burnt me in the past. And I think that's kind of the argument that a lot of Tesla bears will make, is they'll that infamous like graph, right? Tesla's market cap versus like all of the other ones stacked up together. But I mean, when your unit economics and your margins are in a league of its own, it's hardly a comparison to make. Now, yes, if Tesla was operating at the same level of margins as these companies, and let's be honest, I mean, a lot of these companies can't make EVs at scale, and we know in 10 or 15 years, almost all governments are going to scale out, if not ban gas vehicle sales, new ones at least.
Mhm.
Then we talk about terminal value, and we talk about, okay, if and this is my general like 101 thesis when I talk to friends about Tesla, is that, do you agree in 10 or 15 years, a lot of governments around the world, if not all, in first world countries, will ban or limit gas sales? And they go, yeah, probably in the next
Mhm.
15, 20 years. Okay. And if that respect, and we know, I mean, who's making EVs at a profit at scale with the ability, other than Tesla? Well, okay, no, let's say no one right now. Well, in that case, if Tesla already has these industry leading margins right now,
Mhm.
already is approaching, not at mass scale yet, but really approaching there soon for that exponential growth curve. Um, well, and we know the terminal value for a lot of these auto businesses with the amount of overhead that they have, and having to pivot is not easy for an antiquated business. Well, that it's not really a good comparison to look at market cap of those automakers versus Tesla, because it's just apples to oranges, right? And we're not even getting into 4680s or gigacastings, something that'll
Yeah.
bring Tesla's margins. And I don't even bother getting into that. And I think even Sawyer Merritt on Twitter retweeted something the other day. He said Tesla had a more profitable quarter one than GM, Ford, and BYD combined.
Yeah, I'm
So,
not I'm not sure about that math.
oh, really? Okay. Well, it had more. It had more. It was more profitable in quarter one than Toyota. That I know for
Mhm.
sure, right?
Maybe like if you just look at automotive alone and you leave out finance, maybe that was what he was looking at.
Oh, okay, got it.
Let's
Yeah,
look at some options and think about how long-term Tesla owners can do some things around you know the when things get really pessimistic or things get really elevated.
sure.
Um, I've just
Uh,
been thinking about this a lot, especially since the start of the year. We went all the way. We closed January 3rd at 11.99 a share, essentially 1,200.
yeah, I know. I
We
remember
got
that day.
down to 620 on Tuesday.
I know.
Um,
Yeah.
it's not. I don't think it's really possible to reliably pick the tops and bottoms, but
Mm.
I think what you can do is try and get into a habit or a discipline where when things are really good and Tesla people on Twitter are like really euphoric and excited,
Mm.
um, what people are tempted to do is then plow more money into the stock.
Mm.
And I think what we need to do to kind of help ourselves over time is to be trimming back on our risk when we're up here at a peak. We want
Yeah.
to trim it back a little bit.
Yeah.
Um, Whether you're selling calls there or you're trimming back on stock. Um,
Margin, especially.
yeah, selling and get rid of a negative margin balance.
Yeah.
In order to have ammunition to buy down here, down at
Yeah.
756, um, you need to take off leverage of options or take off margin when things are seemingly really good. And it's hard to do because like everything looks good. And even in January, Tesla announced record earnings that blew away Wall Street,
Yeah.
and no one cared. So let's look at. So you're looking at January 2024.
Yeah. Let's look
It's kind
at
of interesting.
June.
So let's skip June for a second
Yeah.
and go to January,
Okay.
and we'll just look at the January 400s, and we're just going to play around with a little math, just kind of explore.
So those are
Um,
priced in at 400, and let's call it $430. So 43 grand.
430.
Yeah.
Okay, so what that means is if you add that strike price, which is $400, and you add that to the price of the call, 433, you basically need for you to break even um,
Five
around
grand.
expiration in 2024, you need the stock to finish at 833 a share. Um, so I was looking at ones like these earlier in the week, and if we then look at June, so that's 433. If we then look at June,
Those are
So
450.
What's that?
Those are $450 each.
450. So you're it costs $17 more, which is essentially like 4% more is what it costs you. But you're getting like I did the math on this. You're getting 28% more time.
Right. Okay.
So it's much more forgiving and it's less expensive per day.
Yeah.
What's interesting about deep in the money calls is it's a way to have leverage, but you're not using margin. You're not forced to sell these calls if you buy them with cash. You're not forced to sell them. And the way I think about them at a high level is I have a hard time seeing Tesla going below $400 a share. Would you agree with that, Yasu?
I think so. Yes. Well, considering their earnings growth story stays intact, yes.
Yeah. And we've already had this move where Tesla's gone down 50%. So in 2020, it went down 60% off of a high. Last year it went down 40% off of a high. And this year has been about 50%. I just have a hard time seeing it down at 400. So it's like, if I want to just only own stock, why am I tying up $757 a share?
Right.
Why not try some of these deep in the money calls? But you have risk. So what if it doesn't finish at 850 a share for these? These would be 850 a share is what you need.
Yeah.
It's more expensive than using margin. Margin, you're only paying 1 or 2% a year. So with this, you'd be paying more. So there's differences and there's trade-offs, but it's kind of how I think about it.
So these deep in the monies are, I mean, they're very capital intensive, right? So that's the big thing. Now with Tesla and Tesla split potentially happening this fall, let's say, those will make those a lot more appealing to the retail investor, especially ones that have been buying in the last little bit here and don't have that much cash sitting on the side. So with these, and I was just doing some quick math. So the 500 strike are $400. So that's about a $900 break even. So obviously, that's by the way, that's an 84 delta. Is there a certain delta level that you like to look at when you go in the money, as deep as possible, it sounds like, or do you care?
Yeah, there's no real science behind it, so I'll say that. Just kind of more of a feeling. With deep in the monies, you have less risk. You're being less demanding on Wall Street and the public to agree with you. So, what we've seen recently is the multiple has come way down on Tesla. They may earn $14 this year. So they're trading close to a 54 PE on this year's earnings, which is kind of crazy for a company that's growing their earnings at more than 100%. Now, granted, that'll slow down eventually, but Tesla has tremendous leverage. So I kind of like to look at a deep in the money call where it's around half of the current stock price. And I like to look at strikes. Did I lose you, Yashu? Uh-oh. I might leave and come back. Hopefully this doesn't end in the stream.
Sorry, I had to.
There, he's coming back.
Yeah, you don't want to know what just happened. I left something on the stove right before our stream.
Okay.
So no, I just had to turn off the stove. I just see smoke. I'm like, what's that smoking smell? I smell. I just looked at in the kitchen. There was smoke everywhere.
Was it ramen noodles?
No, it was actually yams, unfortunately. Ooh. So sorry, so I missed the last section of what you said very rudely. So
I kept going.
Okay, good.
What I like to look at is around half of the stock price, and I like to look at round strikes because I feel like there's more trading around those strikes, and I feel like if there's more eyes on the strikes, then maybe when I get in and get out, I can get in at a little better price. But that's I'd say a little more superstition than anything.
Got it.
I've also used upside calls where I would look a little bit out of the money, maybe like 900 or 1,000 strike for leaps with the stock at around 750. But you're being a lot more demanding, and your break even versus the stock is much less.
Right.
You're definitely getting a lot more leverage.
Yeah.
But the problem is we need Wall Street to agree with us, and Wall Street, as we've seen, just take the stock down for maybe even just because people are selling the Nasdaq, they'll take Tesla down twice as much as the Nasdaq is down.
Absolutely.
And that's like, I don't want to be, if I'm in options, I don't want to be as dependent on Wall Street to agree. All right. Yoshu's checking something out. I don't know if it's just me talking to you all. I hope you're having a good Friday. Definitely nice to have a little bit of a relief. Before the call today, I was looking at when was the last time Tesla was this price, and it was about 10 days ago. So what a 10 days it's been. I think in general, it's better to not look at this stuff so much. When you have an options position or margin, it's hard not to look. It's hard not to just be engrossed in all the news of Tesla, and looking at your risks and all that.
I'm the worst. This is a very weird stream. I'm sorry. The smoke alarm started to go off, so I had to run and open all the windows, and I just started waving like a maniac at the smoke alarm.
So let me give you an interesting thought.
Yeah.
Let's look at the June 750 calls.
Okay.
I'm just going to give a hypothetical. It's not investment advice, and if I might describe something that doesn't happen, and highly likely that it doesn't.
So 750.
It's just a basic idea I want people to hear. Yeah, go ahead.
They're about $280, $28,000,
$280. So let's call it 300. Okay. So let's say you buy those for 300 bucks each, and for whatever reason, Tesla keeps marching up, and in less than a couple months, suddenly we're sitting at 1,000. So if we got to that level, the value of the 1,000 calls, everything else equal, would be about $400.
Yeah, that's quite the appreciation.
Yeah. So the thousands would be 400 because the 750s are 300 today.
Yeah.
So just think about this as like, if you can somehow scoop calls when people are afraid and things are depressed, and then what if you could then sell 1,000 strike call for $400 against these 750s that you bought for 300?
Yeah.
So like you're fully collecting what you put in, and you're actually getting extra $100.
Yeah. And
you're left with a $250 strike call spread. And and the value of that is going to be between a zero and $250. Like if the stock finishes 1,000 or above,
yeah,
it's worth $250. If it finishes 750 or below, it's worth $0. And it could be in between. And the risk reward of doing something like that would be good, but like those trades are hard to put on. Like you gotta,
they're very illiquid sometimes.
You gotta buy opportunistically, and and lay off when
yeah.
everyone's feeling good and you're feeling like it's just going to keep continuing to go up.
You know what's crazy, Bradford, is that April 1st, do you want to take a guess on how much these 750 strikes were selling for? June 2024's?
What was the share price?
I actually don't even know. I'll just tell you. It was $580.
Wow.
58 grand just April 1st, so a couple months back.
Wow.
And April 1st, I guess we'll pull that up on the chart here. April 1st,
1100
Tesla.
or
I think you're about right. Yeah, 1152 that day.
wow.
Yeah, 1152. That was the end of that big ramp up that we had. So these contracts have taken a huge beating in the last little bit, and that's not to say that they won't continue to flatline. But you're right. The kind of the deeper in the money you buy, the less implied volatility you have to worry about. So even if you do flatline here for the next couple months or whatever it might be, or continue to draw down slowly, there's not a lot of implied volatility to be drained out of those, right? That's the benefit of those very deep in the money that you're talking about, versus if you buy like at the money, then 50% of your contract is still extrinsic value. So still theta to be decayed out. So by the way, I see comments coming here about by the way, the house is fine. Don't worry. I appreciate everything's fine. Just like it smells really bad in here. But throw in your Tesla closing price guesses. I see people have already jumped the gun, and that's cool. Price is Right rules. Guess on the dot or under. And guests of the shows always go first with their guesses.
I'm just gonna go with a silly number. I'll go 754 spot 32.
754.32. Okay. I'm going to guess 760 on the dot. I think we're going to finish high of day on the dot. That's my guess. We'll see. Try to keep it optimistic. So by the way, that's a pretty, I think it was, I probably missed parts of this while I was running, but I think that's a really good strategy. If you're buying deep in the money leaps, you can always sell premium shorter than that, right? So if you're buying a June 2024, call it 500 strike, and so you're kind of long those deltas, you could sell premium past that on a monthly basis, even a weekly basis, because technically speaking, you're covered there because you're long those deltas. So if you have a 500 strike leap for June 2024, you could sell 700 strikes for July, or not 700 strikes because those are in the money now, but let's say 850 strikes for July or something, and collect some premium. And then continue to do that. It's kind of like a deep man, like a poor man's covered call in that respect as well, right? So, is that a strategy that you implement?
Not yet, but yeah, I'm familiar with selling weeklies to do income. That's something that is in my wheelhouse. I can do that. I'm not doing it yet for myself,
okay,
or others. Yeah, thinking about these deep calls, like you said, they got up to 580.
Yeah.
So it kind of cements like when things are going well with the stock, let's be looking to trim. And then what you're talking about is like a weekend and week out. So on a weekly basis or on a monthly basis, selling higher strike calls to generate income. So I think that can work too. But one thing I've noticed in Tesla options is like when the stock's going like this, the calls can get like even more overpriced as people FOMO buy into the calls.
Yeah.
And so one thing you could do is just straight up sell calls you have, or you could look to sell higher strike calls and lock in a profit that way.
So but how do you, like, for example, this run up middle of March from 764 to 1152, at what point do you look at, because that's always the double-edged sword I have, is like when Tesla's running, it likes to run. And let's say if you were to cap your upside or sell premium, let's say in the middle of this bull run here, or let's say over here, you would have missed out on a large percentage of those capital gains, of course.
Yeah.
How do you how do you balance that? Is it like a 10% up day? Okay, it's time to trim, or time to cover some margin, or time to sell some premium. Like how much is too much for Tesla? Because we know Tesla has a history of just wanting to, like when it runs, it will run fast. Doesn't care if it's a mega cap. Like, do you have a certain threshold that you look at, different levels? How do you kind of manage that?
Well, some of it's feeling, but like if you look at that 750, so up 40% from 750 would be $300, so that'd be 1050. So you definitely wouldn't capture it all. Like you can't buy the bottom, you can't sell the top. So you got to be, if you're trying to do it a little bit, you got to forgive yourself because you're not going to nail it. But I think like if you're one of these people that's all in Tesla, and when I went down to Austin, I met a bunch of them. I went down for TeslaCon, and I went down for the Cyber Rodeo and met a lot of people, including Farzad and all that. A lot of people are all in, and I certainly respect that, but it is risky, and I feel like there should be ways that you try and manage that risk a little bit. Like, what are some ways you can kind of rejigger your portfolio to keep adding cash as you go, or to somehow add more shares? Yeah, I've ended up with more shares than what I started, and I'm not saying I can repeat that, but that's kind of the hope, is if you're trimming back, and some of it's sentiment, so it's not just numbers. It's like, what are people saying, and what's changed in the news? Is it up because the triple Qs are up, half of what Tesla's up, or is it up because of something else?
Is it up because of Tom Brady? Right.
Well, that's a good reason for it to be up.
Maybe we'll get another one of those deals soon with like Russell Wilson or something. Adam has a question for you. Thanks for the super chat, Adam. Yasha, ask if it's easy to sell a very expensive in the money option as the expiration nears. Example, if it's worth 125K, 3 days before expiration date.
Yeah. So basically, at that time, the call would be worth basically the share price minus the strike price is what the call's worth. And I think Citadel and other high frequency trading, they're watching these strikes religiously. So if for whatever reason the market isn't like super tight on those calls and trading in line with the stock, you want to have live quotes if you're selling something like that. You don't want to sell it at market in case it's wide.
Yeah, definitely don't sell it. Pull up level 2, pull up time and sales, right? And look at what's happening.
And so if the parity value is 125, then I think worst case you can offer it at the parity of 124. Like give the market makers $1, and they should fill you. They should see it and fill you. And basically what they'll do is they'll buy your call for 124 and sell the stock. Same as that moment.
And you would know, you were a former market maker yourself. So
I was a stock options market maker for 5 years, and at the CBOE in Chicago.
Oh, boom. There you go. 759.62 close on Tesla. By the way, for the filling of that, I usually, what I do is I put an order at the ask, and I just leave it, and then I inch it down slowly and surely if it's something that it's like very, very expensive like that, because I'm thinking I just want the best bite, and every so often I'll just bring my like whatever, just my price down. So that's sometimes what I do. I know it takes me longer, and price can go against you in that time, but I just have a hard time with something so wide, usually just going right in the middle plus $1 or something. So I'll just usually do that.
Yeah, I'll tend to go in the middle and then just move it by $1 after they finally like show my order to the markets, and then if they don't take it, then I move another $1 after a minute or something like that.
Perfect.
I think that those dollars don't necessarily matter a ton, because like if let's say the implied volatility of a Tesla leap is like 60.
Mm-hmm.
The Vega on one of those calls, and Vega is, which means is if the implied volatility changes by 1 point, how much does the stock option change in price? And Vega on some of these calls can be like 4. So it means like if the implied volatility went down by 1, then
Right.
the price options were $4 less.
Right. Yeah.
And so like I don't think some of these dollars matter as much, but I think it's good to have live quotes. It's good to
Yeah.
kind of start
Definitely.
in the middle and work your way down if you're trying to
Yeah.
get a trade done. Yep.
Definitely time and sales level 2 is your best friend, and pay for data. Like you're saying, like don't just market order that. Definitely
Yeah.
not.
No.
We got a lot of good guesses, by the way, for the closing price. Adam, you were pretty close. But Sean was actually pretty close as well. But our winner is accumulating Tesla as the winner, 759.32. This is the closest price at or under. And I guess I wasn't too
You
far
were
off either.
close.
Yeah, not too far off. We
You're
finished.
close.
Actually, I think we finished at high of day, essentially 20 cents off. So 7.33% up day. By the way, let's just put this into context. The NASDAQ was up 3.26%. Look at that rally in the NASDAQ to finish off the day. I guess a lot of shorts recovering before the long weekend and wanting to get out. So when the general sentiment is so negative, I'm guessing the market's net short. So that's probably what we saw. Thoughts on the day, Bradford, other than me running around like a chicken with its head cut off, trying to save the house?
Yeah, I think the last few days, maybe the shorts are covering some of their puts and shorts or whatever. The Nasdaq was up, so basically the triple Qs is going to be buying Tesla stock. They're an index; they have to buy what's in the index.
Yeah.
So that pushes things higher. But sometimes all that changes might just be the people who were scared, they got out, and they're done pushing it down, and then you
Yeah.
just need a little break and maybe a sunny day in Vancouver, and suddenly the stock is up and on no real news, no
Yeah.
no fundamental to the business news.
No. Yeah. Not only that, I think the biggest thing I'm kind of because here's what I'm toying with is like I don't think we're gonna have a V-shaped recovery like we did in 2020 with the stock market. I think it's probably gonna be more of a meander flatline before we see that big. Hopefully I'm
I think
wrong.
that's the fear talking.
Yeah, maybe
I
it's just
think it is like
I'm too jaded now,
I
right?
was talking with someone on Tuesday. I'm like,
Uh-huh.
I don't see how Tesla isn't like the same price or lower like a month from now after
Mm,
after after production and deliveries or after the earnings report in
mm,
late July.
mm-hmm.
Um, I don't see why it would be higher, but then like that's when it went higher.
Yeah, hey, that's a good point.
I
Whenever
think we got beaten down a little bit.
yeah, like with Tesla, I think the lesson is expect it when you least expect it, right? both up and down, right? Yeah.
Yeah.
So awesome. Great chatting with you as usual, Bradford. Sorry for me running around and
Oh, I'll give you one resource that I think
yeah.
is helpful. The CNN Fear Greed Index.
Yes. What is that sitting at right now?
I think that's a good one to look at, and it'll show you like a gauge where this is like extreme fear, and I think it's just like busting from extreme fear to fear. If they update it overnight, I think
It's right
that's where
here.
it'll go.
Yeah.
Um, in January, it got up to greed. It got to a reading of like 61 or 63 on January 3rd. And
Mm.
if you click on the timeline on the upper right of it,
Oh yeah.
it shows you the last year. So that gives a bit of a sentiment gauge, but I think a lot of this is quantitatively driven. I think other ways you can look at sentiment are like on Twitter or YouTube and kind of see what people are saying about it.
Yeah, for sure. No, this is always a good one. It looks like we're oh yeah, we are definitely still in extreme fear right now. Maybe that's what's talking through me. So I guess we'll see. I mean, quarter two is going to be interesting to say the least. But the question is really, what isn't priced in is really the question at this point. Like so much has been priced in, and hopefully we get some good news whatever way, whether it's macro, whether it's war speaking, we get good news, out of Ukraine. It's interesting times to say the least. So.
And some of those startup costs are already priced in. There's some people were saying that 100 million of the startup costs for Berlin or something were put into R&D in Q1. So instead of putting it in the cost of goods sold, some of those startup costs for Berlin and Austin might have gone into R&D, because they do need to do engineering and research to get those set up. But I think there will be a little bit in cost of goods sold this quarter for the startup of Austin and Berlin. I have a hard time thinking that's going to be more than $200 million, which would be about 20 cents a share for Tesla, maybe 16 cents a share. Yeah. So I'm curious to see how it turns out. I always look forward to production and deliveries, and that'll come on July 2nd. It's been in the morning, and always look forward to earnings. It's like a long way. We're 2 months away from earnings
still.
We're
still 2 months away, and hopefully it's like the January 2nd or delivery report we get, right, with Tesla hitting $1,200 again. This market is, I've never seen a market this schizophrenic and just bipolar with everything, and at this point it just seems like the question I continue to ask myself is like, at this point, like, what isn't priced into the macro market? So these are the times when you want to, I guess, you want to have a longer term approach to everything that you're doing, because you have the opportunity to, right?
There's a chart shared on Twitter where they're showing the peaks that happened in the .com bust, and it was companies that are trading for less than the value of their cash minus their debt. So basically, when the stock is trading for less than cash minus debt, what the market is in essence saying is that the company is not going to create any economic value beyond the cash they have on their sheets.
Right.
And that spiked up again. So it spiked up in the .com bust. It spiked up in real estate, global financial crisis, and it did it again. It has now. And there are companies who are burning cash, like in the biotech space, that may never become profitable, but
Rivian, Lucid.
Some of them will work. Yeah. I think Rivian has some big problems. They just got rid of their head of manufacturing again.
Right. Yeah. I saw that you
right around the IPO, they got rid of one of them, and
might
have been the COO, and now they got rid of the head of manufacturing, and allegedly they're splitting it into 2 divisions. So like Rivian doesn't need more complexity. They have 4 different models. They're just starting production. Like, figure out one model and scale that up and make it profitable.
Agreed. No, that's the problem, right? With and I saw someone ask this question earlier on the stream. I don't know where it is now, but it was like, why does legacy auto and all analysts think that more unique types of models is somehow better for the business than just focusing in on a few models? And really, like, it just seems like that's so true. It's like, you've for GM, they're like, oh, we're going to have 20 new lines of EVs. It's like, how about you focus on one and bringing that to scale and doing that profitably? What's the point of having 20, half done cars that you can barely put out at a profit? So and I made this analogy before. It's like that restaurant that you go to that's super high end, super expensive, only opens for 4 hours in the day, but it only has like 6 things on its menu, right? It's versus that like really beat down restaurant that you go to on the side of the road on the highway that has like menus that's like 4 pages long. Someone hasn't ordered this dish in like 4 years, and the kitchen staff has forgotten how to make it. Like, this is kind of the analogy that I kind of have, and obviously the iPhone too. So yeah. Awesome. Oh, that was Boyle. Thanks for a great ending to the week. Super awesome to have you on again, Bradford. And it seems like it's always a good omen whenever you come on and enjoy some time here with the Hit That Bit crew. So I appreciate you coming on. Is there any parting last words or any way that people can connect with you should they want to?
You can find me on Twitter, Brad S. Ferguson on Twitter. On the internet, hffinancial.com. Recently, I wrote something about Teslanaires, and that's at /Teslanaire. I'm always looking to learn and keep an open mind, be curious. I think that's kind of our goal is, we're always learning, and
Yeah.
just encourage people to do that, and just step back and look at the big picture. I'm down a lot of money this year, but someone said, well, look back where you were 3 years ago. And then when I did that,
Yeah.
yeah, it made it hurt a lot less.
Yeah. It's always net that matters, right?
Yeah.
So absolutely.
Yeah, I was able to be a little more grateful, but it is okay to be upset, sad, but just don't get too down on yourself, because none of us can do this right. I do this for a living, and I feel the emotions too. I can't buy the bottom or sell the top. But I'm definitely looking for ways to get a little cute from time to time.
It's always nice to get your perspective, and you're totally right. Net matters, and the whole. It's not just Tesla, right? Like, I mean, it would be one thing if only Tesla went down 50%, 40 something percent in the last couple months, but it's been the entire market, so we know it's a re-rating of everything. And as long as fundamentals haven't changed to whatever stock, insert X stock that you follow, if the fundamentals are the same as they were 6 months ago when the stock was 50% higher and you liked it then, well, make sure that you do your due diligence and you still like it now fundamentally. Nothing else has changed, and have a longer term perspective. And it's always tough to go through these things. But you know what? It makes us stronger, it makes us more agile, it makes us appreciate the highs even more once we have them again, which hopefully we'll have you back on for an all-time high soon enough. So appreciate you coming on.
Yeah, just don't get roped in and plow more money in at the high, right?
Yeah, that's true. FOMO is a real thing, right? FOMO is definitely a real thing.
And maybe the end of this week was a bit of FOMO too. Like, people worry they missed the bottom. They're like, well, I want to buy the bottom and I missed it, so I'm going to buy some now. That could be also a thing.
Absolutely, for sure. Love it, my friend. Thank you. Honor to have you on the show as usual, and we'll catch you in the next one.
Yep. Bye for now.
Take care.